Welcome back to EDS, and in this video we are going to take a look at how you can write your own options contracts, how you can collect a premium upfront and generate consistent returns year on year. So what we're looking at right now is our brokerage platform. This is our portfolio and just a small account. We've got a nice selection of underlyings here, and we will come back to the portfolio, but in terms of looking for new positions, what we want to do is open up a watch list. Right now, we're just using Tom's watch list. It doesn't really matter what watch list you use. You can just make up your own one. So we're using Tom's watch list at the moment. First thing we want to do is see where we are in the option cycle. So what we want to do is if we just pull up, just say Apple or something, and we go over to the trade tab, we can see here this is the options chain, right? Everything denoted by the orange W is a weekly, and then everything else is a monthly. So for what we're going to be covering in this video, we're not going to be touching any weeklies. We're just going to be looking at the monthlies. So the next monthly is September 20th, which is 11 days away. That is a bit too short for our liking. So we're going to go to the next one, which is 39 days out in time, October 18th. So now we know where we are in the expiration cycle. So we're looking for positions. We're going to be in a contract for potentially up to about 39 days. Could be longer, but as a starting point, about 39 days. So what we do is we come back over to the watch list and we can filter out everything that has earnings within the next 39 days. If we can just get this, there we go. We can just go to 40 days or 39, that's even better. So anything that has earnings over the next 39 days will not be included in this list. So the reason for this is we do not want to be making trades on underlyings that have earnings at some point in their contracts. Volatility will increase. It could potentially mess up your deltas. If you want to put on a separate earnings trade, that's different, but for your main bread and butter, you're probably not going to be wanting to do that. Okay, so now we've got a watch list. So next thing we want to do is filter everything by high IVR to low IVR. We want to sell when implied volatility is high. So we want to filter everything and see where the highest implied volatility is. So X, we've got United States Steel Corp with an IVR of 100. This is, of course, just the first one on the list. However, you would want to ideally go through the entire list and see what would fit well in your portfolio. Make sure you're not too heavily allocated in any one sector, for example. So let's just say you don't have any positions on with anything to do with steel or even manufacturing or anything like that, right? Cool. So we go over to the trade tab. As we can see here, October 18th, there is earnings, October 24th, but that's fine. We'll be out of the contract by then. So October 18th, we can have a look here. This orange bar represents our expected move of the underlying over the next 39 days. So what I typically like to do is start off with a 16 delta. As we can see here, there is no 16, there is a 15 and an 18. We can go with 18. Anything between 16 and 20 is ideal. So if we go to the put side, there is actually a 16 delta on this side. So overall in the position, there's a negative just under 2 deltas, which is fine. As we can see here, this green bar shows our break even, and our break even bar is longer than our expected move, meaning that our expected move shouldn't exceed our break-even points, which makes it highly likely that we will actually end up in a profit, which is also denoted by this probability of profit here at 73%. This is a very high probability trade. So if you look at this position, we can collect $1.42 up front, which is $142 for your account in cash. It would require just under $500 in buying power. So even if you have a small account, you can get involved with something like this. This strangle does actually look quite nice, to be fair. Let's just take a look at the chart. As we can see here, we've had this big sell-off here. IV is super high right now, and this is actually looking like a very nice position potentially. As we can see here, there was a sell-off here before. IV jumped up, IV kind of stayed sideways, and then we dropped off a little bit later on. Hopefully we can see the same thing here. We want to see a contraction IV. But for right now, this actually seems like a very nice trade. I'm not going to place this trade because I already have a lot of positions in this portfolio. It is only a very small portfolio. However, if I had space, I would definitely be looking at putting this on, especially because the buying power requirement is so low. Cool. So that's how you look for new positions. Obviously, make sure your positions are diversified. Make sure your deltas are being balanced. If you've got a ton of put spreads, maybe sell some call spreads. If everything's delta neutral, then you've got freedom to pick there. QCOM is usually quite nice. Intel, we've already got a position on Intel. BA is quite nice. SMH is quite nice. GLD, GDX, CMG, we've already got a position on. This is obviously the oil futures. Which we're not going to go over featured in this video. AMD, Apple, some really AVGO. AVGO was looking nice the other day. But yeah, that's basically it. That's basically how you look and find positions and structure positions. That's a strangle. So now we'll have a look a little bit at our portfolio, what's been happening in the market. So if you just have a look at SPY. Okay, so if you just have a look at SPY here, as we can see, on Friday we did have a big sell-off there, and the market did open. It did gap up a little bit, and it has been moving higher slightly throughout the day. We can see reflected here, if you remember correctly from Friday, SMH and AMD were in the money. We did roll the call side down on those positions. However, we are no longer in the money. We are just on the edge. We have got a tighter anaconda now, but we have also collected more premium. So exciting to see how AMD and SMH turn out. GDXJ, of course, we rolled this down as well. We never actually breached that strike, but it was an early adjustment, just as a preventative measure. Again, still very happy with this. Hopefully, we can see the market rebound a little bit. Those are the major updates in the portfolio. Today is more of a day where we just sit and wait. There's not really too much to do, and that's completely fine. And that's basically going to be it. So the only other thing you want to make sure is your positions are the correct size, right? Poor position sizing will kill your account. So we have this position sizing template. The way it works is you enter in your portfolio size. Let's just say you have a $15,000 portfolio. Let's just say, and then you enter in the current VIX level. Let's just say it's at 61.2, right? Super high VIX level. What will then happen is everything below will be automatically calculated for you. All you need to do then at this point is just use this as a guide, as the backbone to structure your portfolio, and you'll be fine. It goes over how much to allocate to undefined, defined positions, and also how much of your portfolio you should allocate to short premium in general. So you can get yourself a copy of this inside EDS Premium. What is EDS Premium? EDS Premium gives you access to all of our portfolios, small and large. So doesn't matter what size account you have, you can there's a position there for you to copy. And we have a full course, so there's no prior knowledge required. We'll teach you everything you need to know so you can learn and earn at the same time. Of course, it is a private community, so you can speak with myself and other like-minded individuals. And there's also a 100% money back guarantee. So if you've gone through everything for 6 months, followed our trades, and you haven't seen any results, we'll work with you for free, or you can request a full refund. So it's completely risk-free on your part. Right now, it is £1 a month, which is an insane bargain. The price will be going up. However, whatever price you pay is the price you're locked in at. So if you pay £1 a month, you will never have to worry about any price increases. You're locked in at that price. So you are rewarded for getting in early. With that being said, I'll see you guys on the inside.